Alright, let's talk about the national debt. We hear about it all the time, right? And it's always framed as this giant, unsolvable catastrophe. But what if I told you the solution is already happening, right under our noses? A quiet, almost hidden strategy to make all that debt just fade away. First, let's just try to get our heads around the number. $38 trillion. I mean, it's a number so big, it's basically meaningless. To put it in perspective, that is more than the entire economies of China, Japan, Germany, and the UK combined. So, seriously, how do you even begin to deal with that? For decades, we've basically been told there are only two ways out of this mess. And, well, they're both terrible. Option one, just default on the debt. Don't pay it back. The problem is, that would almost certainly trigger a global financial meltdown. So not a great option. Option two, tax everyone into oblivion. Just raise taxes so high you'd absolutely cripple the economy. It's always presented as this impossible choice, like picking your poison. But, and this is where it gets really interesting, there is a third door, a secret exit. It's not loud or dramatic. It's a much quieter, more subtle strategy that's already in motion. It's a way to make trillions of dollars seem to just vanish, without the political drama of a default or massive tax hikes. So, welcome to the silent solution. You see, the goal here isn't to pay the debt back in the way you or I would, dollar for dollar. Nope, the plan is much craftier than that. The plan is to change what a dollar is even worth. And the best part, from a political point of view, it doesn't require loud, messy debates in Congress. It happens quietly, deep inside the plumbing of our financial system. Now, this strategy actually has a technical name. It's called financial repression. I know, it sounds super complicated, but the core idea is actually dead simple. It's really just a set of government policies designed to do one thing and one thing only. Make sure the money it uses to repay its debt is worth a lot less than the money it borrowed in the first place. Let me give you a really simple way to think about it. Imagine you borrowed $100 from a friend back in, say, 1970. Back then, $100 was serious cash. You could have bought a really nice suit. Now, fast forward to today. You decide to finally pay your friend back, and you hand them a crisp $100 bill. What can they buy with it? Well, maybe a large pizza and some drinks. See the difference? So, did you pay back the debt? Nominally, yes. You gave them $100. But in real terms, in terms of actual purchasing power, you paid back something worth far, far less. You basically got a huge discount. And that is the exact playbook the government is using, just on a scale of trillions of dollars. So how does the government actually pull this off? Well, the main tool, the invisible weapon in their arsenal, is inflation. And I'm not talking about the wild wheelbarrows of cash hyperinflation you see in the movies. I'm talking about a slow, steady, persistent inflation that just outpaces the interest the government pays on its own loans. This chart here shows the engine of financial repression in its simplest form. Let's just say, for example, that the inflation rate is running at 5% a year. At the same time, the government is only paying 3% interest on the bonds it sells to borrow money. You can see the gap right there. That 2% gap? That's the whole secret. Every single year, the real value of the government's debt shrinks by 2%. It's not actually being paid off, it's being inflated away. And when you let that subtle difference compound over decades, trillions of dollars in real debt just effectively evaporate into thin air. And that, of course, leads to the most important question of all. If trillions in debt are just vanishing, where is that value going? Who's footing the bill for this silent solution? Because, as we all know, there's no such thing as a free lunch in finance. The truth is, the value isn't disappearing at all. It's being transferred. This is a massive, silent transfer of wealth. The real value is being moved from the pockets of the government's creditors directly to the government itself. So who are these creditors? It's not just other countries. It's anyone who saves in dollars. It's probably you. If you're holding cash, its value is eroding. If your savings account earns 1% while inflation is at 4%, you're losing purchasing power every single year. If you're on a fixed income, like a retiree, your income stays flat while your costs keep rising. You are, whether you know it or not, helping fund this debt dissolution. This is exactly why financial repression is often called a stealth tax. It works just like a tax on your savings, slowly draining away its value over time. But because it doesn't show up on a pay stub and it never gets debated on the news, most of us never even realize it's happening. So what's the end game of all this? Where is this decades-long strategy headed? Well, it's creating a whole new financial reality, one where the old rules of saving and investing have been fundamentally turned upside down. And this explains so much of what we're seeing in the markets. Why are things like the stock market, real estate, gold, and even Bitcoin hitting these crazy all-time highs? It's not just random speculation. It's a completely rational reaction. Investors know that holding cash is a losing game, so they're fleeing to scarce assets, things that can't be created out of thin air, to try and protect their purchasing power from that inflation engine. There's this quote that just perfectly captures the whole strategy. The US isn't going broke, it's re-engineering the math. That's it, right there. The plan isn't to default, it's to change the math of the debt itself, making sure it gets repaid with dollars that are worth significantly less. And that's really the key takeaway from all of this. That $38 trillion problem isn't being solved like a credit card bill. It's being dissolved, kind of like a sugar cube in hot water. The debt is still there, on paper, but its real power, its real burden, is just slowly being diminished over time. So in the end, the big story isn't really about the government's debt. It's about the currency. It's about the dollar itself. And that leaves us with one crucial question for you to think about. If the national debt is being dissolved, what's happening to the dollars in your bank account?